Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report so intricate, it's like trying to understand your phone bill, but if your phone company was also planning a corporate wedding. Yes, today we are decoding Uniti Group's latest quarterly filing. This isn't just another report, it's a peek inside a potential mega deal where Uniti Group might just reunite with Windstream. What does this mean for their finances and future strategies? Let's get into the details. Make sure you're subscribed for more easy to understand analyses. There is also a Discord community linked in the description below. First, a quick overview. This Form 10Q is basically Uniti Group's quarterly checkup. It covers everything from their balance sheets to what they think about future risks. It's a legally required document from the Securities and Exchange Commission, the SEC. Now, before we get too excited, remember this report is full of forward-looking statements. That is predictions. The company is saying what they expect to happen. They're using words like anticipate, expect, and believe. These statements are not guarantees. Many things could change, like the economy, the future of their biggest customer Windstream, and their ability to keep their status as a real estate investment trust, a REIT. Let's jump into the numbers. I'm going to scroll down to their balance sheets. This is like a snapshot of what the company owns and owes at a specific point in time, in this case March of 2025. Okay, so what are the key takeaways? Well, the good news is that their property, plant and equipment, which is mostly things like fiber optic cables and other essential telecom gear, increased to $428 billion from $421 billion from $421 billion at the end of last year. This suggests investment in an expansion of their infrastructure. Now onto the less thrilling part, their total liabilities remain very high, around $77 billion, which matches the end of last year. This is an important number to watch because it will affect future profits. They owe a lot of it due to a settlement payable, which is an obligation from a legal settlement, and it's around $48 million. Moving on to their income statement, this is where we see how much money they made and spent over the last 3 months. Total revenues were $20.33 million compared to $26.04 million last year. So they are growing slightly. But the question is, where is that growth coming from? Net income, which is profit, took a hit. It fell to $12.22 million from $41.30 and $100 a year. That is a pretty significant drop. This translates to earnings per share, a value that is important to stock investors of 5 cents, which is down from 17 cents a year ago. Now let's see if the report explains why. Next, let's look at the cash flow statement. This shows how much cash is actually moving in and out of the business. Cash from operating activities, meaning just running the business, was $8.6 million last year. However, in the long term, we want to see that number higher. A key insight is that they used a big chunk of cash, $400 million, to repay debt. This is good because it reduces future obligations, though the cash outflows are immediate. There is an interesting line here about tenant capital improvements, where they invested $110 million, while in 2024 that number was only $66 million. This tells me the business is pumping more money into its customer relationships and improvements, which can be a signal that they are willing to invest in growth even if the short-term profits don't look too exciting. To understand where the numbers are coming from, we should scroll to the segments where the company is split up and explained by category. The two business segments are Uniti Leasing and Uniti Fiber. Uniti Leasing has revenues of $222.24 million compared to $217.6 million last year. Uniti Leasing has the highest level of revenue of the two segments. They make money by renting telecom properties. Uniti Fiber did $71.5 million in revenue compared to $68.7 million last year, growing slightly year over year. Now it's time for the supplemental information. Here is a summary of all the important notes for this SEC filing. Notes are needed to be understood, otherwise a lot of the accounting would make no sense. Here is the summary of the main event. Uniti and Windstream are trying to come together to combine their operations. Right now they have an agreement to merge and expect that to happen in the second half of 2025. It's like a corporate wedding, lots of planning, legal hurdles, and hoping everything goes smoothly. The company is dependent on Windstream for most of its revenue. If Windstream has financial problems, it could seriously hurt Uniti. There isn't much to say. It's a clear sign of dependency and a substantial risk. Digging deeper under the section for leases, we see that the business model is dependent on multi-year leases, which helps them get stable cash flow, but also means they are stuck with agreements that might not look too great later on. The value of their leases is estimated at around $4.8 billion as of March. This is a crucial part of understanding the scale of their fixed income in the future. One of the line items in that section is below market leases. Those are usually bad news. They might have gotten into a deal that isn't paying off later. Let's glance at fair value, which is just trying to assess if something is worth as much as it is stated to be in the books. In level 2 liabilities, fair price that can be obtained. They have almost all their senior debt and their financial instruments all neatly grouped together. I suspect this might also be useful if there are large revaluations for certain events, though I do not see any such discussion here. Now let's scroll down to what most people are here for, goodwill and intangible assets. It's interesting to note that all their goodwill is located inside the Uniti fiber part of the group. The goodwill itself seems to be unchanged. How about all that debt we saw on the liabilities? They are carrying almost $6 billion in debt. One thing that is good is that they did spend $400 million to repay some debt. Smart move. And they also issued some notes in place of it. So while the liabilities didn't drop, their maturity got pushed further away. Time to go over the juicy bits that management has to say in this statement. Think of it as their take on how things are going and what they expect. They think they are doing great by reuniting with Windstream and expect that to make the company better. However, it depends on the deal going through, and there are many obstacles that could arise. Their total revenue increased a bit, but net income fell, which is bad news because making more money is obviously a sign that there might be structural issues in the business model. Another interesting bit of data from the same section is their expense numbers. Expenses increased significantly, which cut into the profit. Now, for all this good, there is a risk. The fact that a lot of their revenues and money are all with one counterparty means that anything could go wrong that would sink their business model. They are monitoring this risk. However, there is no guarantee that they can react to it in time. Finally, a section about legal issues. Thankfully, the text is very short, indicating that there aren't currently any concerns that the company thinks will become significant. Okay, what's my take on all this? Uniti Group seems to be at a crossroads. The potential merger with Windstream could be a game changer, but it's also a huge risk if things don't go as planned. While their revenues are inching up, the drop in net income is concerning and should make investors pause. Their strategy to manage debt is proactive, but high debt levels are always a cause for concern, especially with interest rates potentially rising. The dependency on Windstream is alarming. Any hiccup on their side could bring big problems. I'd say proceed with caution here. Keep an eye on those debt levels, the Windstream merger progress. And if you are an investor monitor for a pivot to new markets or services would be a positive sign. Alright, that's our breakdown of Uniti Group's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Also join the Discord for more financial discussions. Thanks for watching. See you next time.